Hey, hey, one person. Um, I'm going to quickly do. Uh, you are first, so now what? I'm going to quickly run through Nixie, and I may, right after I'm done, end it and then start a new live. Frankly, I don't remember how to do a video uh, in some sort of taping way that I can then upload. So I just am going live with this. All right, so let's just talk quickly about, hey, David, happy Sunday. Let's talk quickly about Nixie. Um, we've been talking a lot about finger and what it, like I said, let me do this. I may end it, come back on. I don't know if we can get a guest or whatever for others, but I just want to focus on Nixie quickly. Um, it's my opinion that Nixie, NIXX, over the next, let's say, what is it? It's May. Today is May. Let's say during May, just during May, I think Nixie has a good chance of having another attempt at a run. So I want to get people ready for that. Um, if it happens next week or the following week or the following week, we can look, as I go through this, you may see reasons just to stay in Nixie as a longer term trade. The reason I'm here talking about Nixie is I think there could be a short term trade in Nixie. The stock right now is about $1.80. And I think a very strong argument could be made that it could get into the 8, 10, 12 range and possibly higher fairly quickly. So let's just go through it. Let's go through it quickly. And then I'll all right, here's Nixie, NIXX, $1.82 on May 4th. Here are the activities of Nixie, not all of them, not all of them. And I pulled this from their website, which is Nixxy.com. I typed this up, but these are most of the last news stories, not all, not all. So what is Nixie? I don't know. You can go to their website. They've got a very nice website page. For a lughead like me, they are AI powered communications, but they seem to be billing and they seem to be telephoning communications, I guess. Basically, um, it's an AI company and it's heading toward multi millions, tens of millions, 25 million a month in revenue. All right. Next, Oralink AI platform on April 3rd. They processed 1.2 million in revenue for March. I'm not claiming that any of this, we haven't seen the numbers. I'm not claiming how this gets down to the bottom line. I'm trying to show you there's activity on a lot of activity in Nixie. Call AI was acquired from Aqua Software April 3rd. They have started the process to do a share repurchase program. That may or may not mean much. April 3rd. They purchased two other software items and announced it March 31 for $4 million. They purchased this Ava coaching platform. They got a 1-year contract from Nexxedia, which, when I read the news report, it can scale and it can achieve a monthly revenue, they say run rate, of 25 million. That was announced at the end of February. They acquired TKOS Systems, Software assets, telecommunications, end of February. They entered into a year-long contract with that same company, Nixxy, who apparently does 300 million in revenues a year, regarding their Aura link. And in that article, it said it could scale to 10 million a month. They entered into a multi-billion-dollar telecommunication and data sectors area by purchasing Unified Communications. I'm not claiming to understand how all these work. This is just the news stories. And this all got its jump start with the letter of intent in November of last year to buy Just Got to Have It, who we haven't seen the numbers yet, but they were expected to do $10 million last year at a 40% profit, or margin. Okay, let me just see. Let me see what this is. All right, that's for later on. That's for later on. All right, let me go through this. This is Nixie's chart, and I tried to draw this before I came on. This is how I see it. To me, charts are like reading Rorschach. Is that how you say it? Psychological tests, psychiatry tests. But I see a declining wedge there. You could tell me I'm crazy, maybe I am, but I see a declining wedge there, and the stock has broken out. Take the wedge off, and I see a declining resistance line, and the stock has broken out. I like the wedge pattern if it is indeed there, because that's extremely bullish, and it should, once it's broken out, the stock should go up. I always use, which I don't know if it means anything, I try to count the number of boxes horizontally that the wedge has consumed, and then count it up vertically as my starting point. I don't know, 2.5, 3 boxes. But if you go up 2.5 boxes, you're up at that second green line. I noticed I screwed up, and I didn't put the I didn't leave you the dollars on that side. I was trying to make it so neat. Let me tell you where those numbers are. The stock closed at 180. The 200-day moving average is around $2, and let me get it. I can get it quickly. Well, I'll show it on the next chart. Let's just go to the next chart. Yeah, here. We can just see it here. All right, here's the chart with the with the money on it. You see the declining green line? That is the resistance, and I think it's broken through. Well, let's just work from this chart instead of the one where I was trying to show you the declining wedge. The 200-day moving average comes in at around 266, if I'm reading that correctly. I think that's the next point where the stock will go, and probably fairly quickly. I tried in this graph to keep just a few horizontal lines. The blue line there, I think, is the most likely next target at $3. You could pick other ones, but I think that's my eyeball tells you $3 will be a significant, if it breaks through there. But prior to $3, they could bounce around a bit. But if it breaks through $3, I think it's free sailing. And then you go up into the Twin Peaks, at about 6.25, 650. And I think once it breaks through there, it could be very exciting. And we could come back to this chart that doesn't have any money on it, but you can see the Twin Peaks are the low green line. And I know the next one's 10, the next one's 18, 20. Those are those ranges. Those purple ones are $30 to $40. So what do I think? I think the stock can obviously break 10. I think it can get to 18. I think it can even get into the low 20s, maybe 28 range. The rest of it, it could happen. In fact, it can go all the way up to where these highs are up there when it was recruiter.com, but I'm not calling for that. All right, one more chart, and then I might just sign off. And let me check what this chart is. Oh, this is Nixie from barchart.com. The purpose of this is to show you that around November, the stock's volume went to 60 million in one day. And the peak on that day, during the day, was around $8 a share. Now, it looks like if you see that spike just before that $8, they tried to get it going a few days earlier, but the big volume is on that day where it went to $8. I recall that it traded at $12 pre-market. Then more recently, March 25th, the stock, I'm having a hard time reading that. Yeah, 60 million. They're both right around 60 million. The volume again was very high. This time the stock didn't really, this is a weekly chart, I think, or daily chart, I can't tell. But the stock didn't really show much. And I don't recall if it did a big move prior to the market opening. So anyway, those are our two data points of what happens when the stock volume goes up. And then I think I have a short-term chart here. Yeah, this is the 6-month chart, I think. Nope. Yeah, 6-month chart. It's a 6-month chart. Sorry, my eyesight isn't strong this morning. So again, you can see that the moving averages, I think you're about to get a golden cross of the whatever that is, 20-day and 50-day, which is very bullish. But the stock has crossed the 20-day and the 50-day, very bullish. And I don't know, that's about 2 weeks of strength. Even though it doesn't feel like it, it looks like about 2 or 3 weeks of strength. Here's the point of this. That big circle in the yellow, that was the day of the big volume, most recent big volume. And the stock went to the 200-day moving average. I drew 2 arrows with my finger there to highlight the peaks in the stock that you saw in the previous chart. That 60 million share day was somewhere in there. I think it was at the beginning of December. This is a weekly chart, so it doesn't show perhaps the pre-market opens. But I just want you to see that the stock doesn't necessarily soar when there's high volume. I wish I had left the Wish I had left that targets for you. So what I think is going to happen with Nixie is all of that news and all of that activity. There's going and let me show you one. I didn't read it to you. If you read here on the second bullet point, Link AI platform processed 1.2 million in March. That news release said they have rising revenue and they'll be revising in the near future their revenue projections. That was April 3rd. So I think what you're going to see with Nixie as soon as this week, it might be the next couple of 3 weeks, I think you could see what's promised there, that they start talking about their business plans and maybe revising projections. But I think you may see also a bunch of follow-on updates as it relates to all those news stories. If Nixie starts to trade upward, bear in mind what I tried to show you, that even with big volume the last time, it really didn't get up and skip to higher numbers. The first time it went $12 pre-market and $8. So my targets on it, sort of 60–80% odds. I think you're going to see the stock have a big volume day. I think it is going to try to get to $6, $7, $8. And I'd give that 60–80% odds of achieving that target. If it breaks 8, breaks 10, it's not clear, unfortunately, to you on this chart, but you can see $18, mid to low 20s, maybe 28, and then the purple lines are $30 and $40. As you go higher up those numbers I stated, I think the odds go as low as 5% to achieve those higher numbers. But you know, anything's possible. This was recruiter.com, and that stock was heavily shorted. So to the extent that there might be shares that have to be covered, it could go further. But bringing it back to reality, I think the stock over the next, let's call it 2 weeks, could be longer, could get to that $8 range plus or minus $2. I feel pretty, I don't know, comfortable is the wrong word. I feel optimistic about that. If it breaks 8, breaks 10, I think the stock could possibly go to 18.21 range, that range, 18.21. If there's still a lot of strength in it, I think it can get into the $25, $28 range. And if there's momentum, like I implied, I think you can see 30 or 40, but you'd have to see massive momentum for those targets to be reached. How do I recommend, if you own it, that you play it? I have a small bit in my IRA, and I think what I'm going to do, I don't have any orders in. I think what I'm going to do is when it goes to 50 million, 60 million, 70 million on a day, and there's no assurance that it will do that. That's an assumption of mine, that it might have that kind of volume again. When it has big volume on a day, or the stock gets up in that $8 range, give or take, I'm going to start thinking I should get out. It's a gut call. If it looks like the volume's coming in strongly and the price is going to be breaking 10, maybe I'll hold off and try to get the high teens. But the two numbers for me, if it's at 60, 70 million in a day, I want to be out that day, whatever it does, if it gets that kind of volume. Secondly, if it gets up to, I'll pick one number, 21, maybe 18, something in that range, I'd definitely be out. It may end up going much, much higher, but those would be my two optimistic metrics to tell me, let's just get out. High volume and a price somewhere at $8 gets me clicking. If it has momentum and breaks 10, I think it can go to 18 or higher. But I don't think I'm going to stick around the party much more longer than that. The two places I'd put my profits, other than the ones you already know, I mean, you know the story of Finger, but the two sort of unique places I'd look is silver and Railtown AI. All right, let me go to the comments, see. Maybe I'll just leave that. What's the minutes in? It's 21 minutes. If I canceled that, people could come watch it all by itself. Or I could just keep going. All right. So anybody that, I'll just keep going. Anybody that came to hear about Nixie, I might talk about it again, but that was my pitch. That 21 minutes. I'm going to stay live because we're going to talk. I'm going to see. I'm not sure Ham left, and I'll see if I can get him on to talk about Finger. I want to talk about a few other things, and we'll just, have a cup of coffee, friend. Yeah, there you go, Kenneth. I wanted to say that. Thank you, Kenneth. I appreciate everybody out there that was saying prayers for Robert Weiss. I didn't know him either, but he tuned in. He watched me, and he reached out to me. When I say I didn't know him, I don't mean I mean I never met him, but we texted and emailed, and he reached out to me and asked me to introduce him to Ham, and Ham I think Ham contacted him first, and you're right, they became very close friends. I think Ham helped him recover his losses in either AMC or GME, and Ham went down to Florida to meet him with his wife. And so, yes, I think they were very good friends. And I think he was a good man. And I thank everybody that has been praying for him. We're all going to die, so I guess prayers don't always turn out that you're going to live. I don't know. I don't know how all that works, but I'm sure the prayers still helped, and maybe they still should be said for him. But yeah, that's sad that he died. I don't think he was a particularly old guy, so it's sad, and I really appreciated knowing him as much as I did. I think he was a generous man and a hardworking guy. I think he was a good family man, and was a good friend to him. So may he rest in peace. See, Ramon is trying that same joke again. You know, Ramon, when I went, she does all this stuff to it. She gets it. She goes like this. She puts up the mirror and she shows it around. And, you know, I walk out. Every woman, it's when I walk out of that place, the music starts playing from some cloud in the sky and from, you know, all the bluebirds are singing and they come and they sit on my shoulder and all the women just swoon because of my hair. But then I get up the next day, take a shower, and it looks like shit again. That's a good point, Jeff. That's a good point. That's a very good point. And I count on that. I count on that. I can't imagine a party in my house full of Brazilian and Colombian William. Well, a Brazilian here and a Brazilian there, it starts to add up. There might not be room for the Colombians. When I went through this phase, I met this beautiful, anyway, I don't know how much I should say about that. Anyway, I went through, Colombian women are beautiful, so are Brazilian. I'll save that story for another time. I have a small position of Nixxy at 162. Look, I forget now who asked me about G-Bucks. I still like G-Bucks somewhat, but when a story starts spending a long time, you start wondering, wait a minute, why is it taking so long? You could say that about Nixie, but the reason I typed out all those headlines, they've been doing things. Doesn't mean it's going to work. Nixie has, let me find out, tell you what the market cap is. According to OTC Markets. The market cap is $33 million. And they have 18 million shares outstanding. I understand who knows if my information is, I don't talk to anybody at the company. I understand from investors, from the water fountain, that they don't want that outstanding share number to go very high. Right now it's 18 million. I don't know. What does that mean? They don't want it to go much higher. Maybe it goes to 30 million. I don't know. But that's a small number of shares, and the market cap is small, relatively. So, we'll see. We'll see. And all in, for me, Nixie is maybe a 1 month now. It's been around on my mind since November, I guess, October, November. But I think if it trades, like I said, to 8, 10 with high volume, and that's all it's showing, I'll get out. If it looks like a breakout, I might wait for 18, let's say. And if it's still going like the Yangtze River, maybe I'll see if I can do something in the 20s. But I really want to, I want to book profits. I haven't had profits in so long. And I just like to pick up a little bit of those other two items I said. Let's see, silver minecart. I have a thought. Wow, that's a nice position. 210. Should I try to average down? Or 221? Yeah, I would. I can't give you financial advice. You have to make your own determination. But I don't know how much money you have, but I would at least buy 1,000 more shares. I might, if you have the money, I'd buy 2,000 more shares. And then, and again, everything I talk about is not financial advice, but you all know that by now. If the stock, if you got your average down under $2 and the stock went to $6, you could sell 1,000 shares, and unless I'm really bad at arithmetic, you'd have all your original money off the table, and then you'd have 2,000 shares, which I don't know. Those 2 points are roughly 650. Once they get through that, is $8 really a stumbling block? Is $10 really a stumbling block? We'll find out. It might not. They might go just run through it. I do see resistance up there around 21. I don't know, 1821, something like that. So anyway, if you sold 1,000 shares at 6, kept 2, maybe you sell another 1,000 at 8 or 10, and then keep 1,000, see if it goes to 18 or 21 or maybe, it could go to 30. Could go to 30. I'm not sure that's the smartest target to look out for. I think I also, just to be clear, I think that if the volume happens again, the reason I showed you those 2 yellow circles is it might only go to $4. So don't be flexible in your thinking, but at 4, it's a double. And I think I really think that something has to happen in May, which is what I think about a lot of these stocks we've been waiting on. I don't know if Ham's going to do one today. I know he's not feeling well. I don't know if he's traveling. Well, I'll try to bring him on. But I talked to him this morning and he sounded terrible. And he told me Robert had died. Is he sick? Yeah, I think so. But I think he's taking antibiotics. When is he leaving to Singapore? I have no idea. He was supposed to go today. He said the other day, you heard it, he's got an open ticket. So if he's feeling poorly, maybe he goes tomorrow or Tuesday. Happy Sunday to you, David, and everyone else. Let me go down to the bottom. Is Ham joining today? Yeah, I mean, I don't know when. I'm not gonna. Well, I guess I could text him. It's amazing. The only narrative that matters is his. So I was hoping I took some time to talk about Nixie, not to distract from Finger, but I know people own it. And I think you have to be quick, as my sister would say, quick as a bunny here in your thinking about Nixie over the next 4 weeks. And it could, and the reason I'm highlighting is I think it could be much, much sooner. We'll find out. We've been waiting forever. And the chart I showed you looks good. I think Nixie has broken out. That's what I think. It's the early sign of a breakout. And there's no way I can talk about Nixie when Ham's on here. So I did not call Ham prior to coming live because I wanted to talk about Nixie. But I appreciate that the only person you want to hear from is Ham. So let me see what I can do. He didn't pick up. When he calls, if he wants to, I'll let him come on. I don't know that his throat's going to let him do it. JP, I heard some information from the Finger has an S3 out. Well, let's look. I find that hard to believe, but it's possible. Ease possible. Ease possible, man. Ease possible. Ease very possible. So March 20, that's not today. Right? That's not today. FNGR. Yeah, the last SEC filing is March 20th. I don't know where else to look. I don't know where you say somebody is already out. It's not filed. At least unless my internet hookup is not giving me access and I'm not getting the let me just resubmit. Yeah, I don't see any filings, but you do bring up something that I've mentioned, and I stopped. I guess I didn't mention it since Thursday, but I do believe, I believe that the contract that Finger has with the government of China, or all the governments of China, apparently exclusive and apparently entirety, it covers the entirety of the demand from those governments for vehicles, C2 vehicles. It's exclusive. I think that's valuable contract, and I think we cannot close our minds to the potential that Finger raises money. And I said that for a few days. And I gave my percentages. I think they're going to do a deal with Roth Capital. And I think very likely it'll be just like the one they did in December, and it'll have all those machinations out of Toronto, like last time. There's part of Roth Capital I think's just a bigger Lynn Partners or a bigger Yorkville or a bigger Kramer and Co., where they just act as a flow through for the criminals. But that's how our markets are set up. I think it's immoral. I think it's illegal. I think it's grossly profitable to the criminals. I think it sucks tax revenue out of our economy. I think it destroys jobs and companies, and no one cares, though. Just no one cares. As long as women are on the board of NASDAQ companies, Adina Friedman doesn't care. As long as Robert Cook can get his rather ill-fitting suits dry cleaned and can keep his paycheck, he doesn't care. As long as Gary Gensler can glad hand his way up the Clintons' butt or up whoever's running Goldman Sachs's butt, he doesn't care. And, Ann Wagner is just a dumbass who actually reads something that was just handed to her about, probably from Goldman Sachs lobbyists, about, we don't want a accountability in trading. We don't want a consolidated audit trail of trades because it is an egregious violation of privacy. We have no privacy anymore in this country. We have none. Not in your financial dealings, your travel, your health care, your phones. You have no privacy anymore. But she wants to protect it there. Why? Lawyers. Oh, I find what you say about lawyers to be so ridiculous. Lawyers have gotten into Congress's minds, the court system minds, regulators' minds, that somehow this criminal activity is a trade secret, and therefore it should be protected. So no one cares. No one cares. And Roth Capital has a big overhead. Anson Funds is a huge client. Hey, you want to take 10 million of the next deal from Finger Motion down $1? Sure, why not? We'll book our investment banking fee. The client gets the money, shareholders get screwed. It's dilutive, sure. Yeah. But I think if it happens, I think it'll be good for Finger if it allows them to get to the next milestone. My measure of the next milestone would be that they can fulfill enough of these contracts on the C2 so that the revenues start coming in with that 90-day, 100-day lag. The revenues start coming in so then they can fulfill the new orders, and then it just becomes a perpetual motion machine, and they don't have to go to the market again, and that'll destroy the shorts. They won't like all that cash flow and all that profitability. If that happens, it's a great deal. It's just momentary pain for longer term, medium term gain. I also think what could be exciting, JP, is there could be a joint venture announcement. There could be a big investor investing. But Ham said something live the other day that one of his big investor friends offered to give Finger Motion money, and Martin turned it down just last week, I think. And well, one positive is they don't need the money. another more likely thing to me, they already signed a deal with Roth Capital. But we'll find out. We'll find out. We can guess, but we don't know till there's an announcement of what happens. To me, it's clear they need to raise money. I've said that for months, and I think anyone that thinks that Finger doesn't need to raise money isn't factoring in the 90 to 120 day delay of payment. There's another word for reimbursement or imbursement. Payment from the governments after delivery of the vehicles. And so that's how I look at it. Anyway. Is Ham joining today? Yes, I called him just now. He didn't pick up. If he calls back, I'll get him. I'll get him on. No, Ham will come on. The thing is, Ham's feeling really poorly. He sounded awful, and he's on antibiotics, and whatever it is deep in his lung. So I'm sure he'll want to talk, but I'm just not sure he feels. There you go. Ham said yesterday Finger refused to sell shares. Yeah, that's right. I mean, what, I don't know, but it could be they have, like I said, what would be magnificent is if they had a joint venture deal going on, or some other, big investment situation, plain vanilla. That'd be great. But I really think the most likely thing is they'll just do an analog to the Roth Capital financing that happened in December. That's the path of least resistance. And how do you pronounce that? That's Occam's razor. It's the simplest explanation. I was listening to a guy, I think last night, it might have been the night before. He's 88 years old. And he said, he basically said all of the quantum theories and all of the elaborate physics that we've come up with might just be wrong. Maybe the universe isn't expanding. Maybe I have to listen again, but the time-space continuum, maybe that was pretty mind-blowing. I have to listen to it again. JP seems like a shill. He could be. Sorry, I didn't know if he was a shill. I didn't know. Don't get worried. If the company needs to raise money, it's a successful company. It's going to need capital. I mean, a company that doesn't need to raise money is, well, they have a lot of overhead, so they probably do. I was going to say CRTD. They probably do need to raise money. But a company like DBMM doesn't seem to need to raise money. Right now, But just understand, all of these companies come to the over-the-counter markets. They come to NASDAQ because of what NASDAQ used to be, not what Adina Friedman has morphed it into. And Bill Clinton's signature didn't help back in 1994, or his government. They all come to raise money. That's the deal. They come to raise money. And if you're successful, you need capital. I mean, that's the game. The problem is it's how you raise it. It's how you raise it. And again, under Adina's crappy leadership, non-leadership, she just looks out for herself and other women. And whatever. That's her agenda. My agenda would be that you have to look out for investors. And by the way, in the United States, apparently, according to a friend of mine who runs a brokerage firm, the majority of financial assets in this country are held by women. So it would seem like that would dovetail, but she's an idiot. I think shareholders should be looked out for, and CEOs shouldn't have to go through all this. You know, the things I talk about, and sometimes it gets people pissed off. A CEO shouldn't have to deal with that. Is this banker working with that short seller, and is this family office just a representative of a couple of other guys, and is this company coming in to merge just part of the whole scheme? They shouldn't have to worry about that. Shouldn't have to worry about that. The SEC should be enforcing. Now, Adina should be looking out for her flock. She doesn't care. Her agenda is womanism. And I tell you, womanism, I'm sure it's great, but I don't see that many happy women that have followed that. There might be some. And I guess if they're happy, they should all lean in together. Anyway, let's not get lost in that subject, because I don't know what I'm talking about. Let's see what you're saying. Well, Tony, I forget who I was talking to yesterday, but I'm amazed at how little, and I say it respectfully, how it's like a language. Just how little you know of this language, not you personally, the whole group. And it's not your fault. It's not your fault. They sate you on these headlines on CNN and the financial news networks. The financial business pages are crap, or at least the Wall Street Journal, Financial Times, they're all woke. The New York Post used to have, believe it or not, pretty good business. I don't see it anymore. I don't think it's that good anymore. The Washington Post, I can't read the Post anymore. I used to read 5-6 newspapers a day. All I do now is skim and try to not get upset at the wokeism. And there's a real cost for this wokeism, real cost. But one of them is ignorance. And I think there's a reason Bill Clinton signed in the law, I think it was early in his administration, that consolidated TV, radio, newspapers. We had thousands of journalists and outlets and Woodsteins, I guess it was, Woodward and Bernstein, everywhere. And now there's essentially 6 sources of media, and it's controlled either by BlackRock or Blackstone. So the news you get is there's a war in Gaza. I always thought a war required a competing army, or competing tanks, competing aircraft, competing generals, competing soldiers. It's not a war, it's a slaughter. But you know, when your media is owned, those two companies are owned. Maybe they're Zionists, I don't know. Maybe. But it's in their interests. Trump just signed a deal on all that, those minerals. I don't think it matters. It's a worthless deal. I think most of the rare earth minerals are going to end up in Russia. He should be signing a deal with Russia. But you know what? Who's going to benefit? It's going to be Blackstone or BlackRock or you know, Finkstein. It's just incredible. But we don't know about it because the media keeps us dumb. Dumb. And then you go into your brokers, and most of them are dumb. By dumb, I mean ill-informed or not fully informed. I'm sure they're intelligent. I'm sure they know every player on the football team and they know how to play golf and they're very good at their pitching woo, and you know, I don't mean they're not intelligent. I just mean they don't even always know what they're talking about here, because Wall Street's turned into asset gatherers. They just want assets under management. And no wonder when Bill Clinton signed that in 1994, effectively $90 trillion with a T, $90 trillion worth of securities can be used. It's OPM. Remember, their first rule is don't lose money. Second rule is use other people's money. It's beautiful. They can risk your collateral, your assets, 90 trillion. And they can do it 10 to 1, 20 to 1. Long-term capital management did it 100 to 1. And they weren't supposed to lose. But they did. They almost brought the whole world down. But guess what? Those same guys, the Finkenstein and the Blackenfeld and the Blankenfield and the Moynihan and the Griffin and all these guys, they control the bloody government. Hey, we're too big to fail. The whole thing's going to come down. My answer? Okay, it's going down. What do you want me to do about it? You wanted free markets. You wanted to regulate yourselves. You wanted free reign. And now you over-leveraged. And it's going down. You're going to go out of business. What do you want me to do about it? Most of America doesn't own your shitty stocks. 99% don't have a dog in your race. I don't give a two wits if your banks go down. I don't care if Goldman Sachs disappears with a thud. Well, it's going to hurt the government securities market? Hey, pal. Once you're out of the way, maybe we can sell our own bonds. We don't need to do it through a brokerage house. If not, let's see what happens. Let's see it all crash down. Maybe we'll pay a price for a year or two. I tell you what, we're the ones, it's the taxpayers funding those bonds. We don't need you trading our entire government bond deck as a ping pong ball, a badminton, a volleyball, back and forth with a bunch of hot shots using leverage. And when you lose, you come to the taxpayer. I tell them, go to hell. Goldman Sachs, go out of business. I don't care. If I were the president, that's what I'd say. Well, it's going to hurt well, you're already hurting everybody. People can't afford houses. They work 2 jobs. They don't know if they're going to have their pensions. By the way, that's the next thing that's the next thing that you're going to deal with. There are no pensions. There are no pensions. The government pensions are just like Social Security and Medicare. It's just all printed money. You'll get it, but what's the value of it? Right now, your pension's $5,000 a month, and it buys $5,000 a month of life. You'll probably get that $5,000 a month, but it might only buy you $500 a month of life in the future. And that's all to keep Goldman Sachs alive and Finkenstein at BlackRock or Blackstone or whatever the hell, and Cooperman at that large blob of a man at I forget the name of his fund. Why? They're too big to fail. Why? We can't let them fail. Why not? Well, because it'll hurt. Well, you're already hurting people. Maybe a world where there aren't credit cards at 30% and there aren't mortgages so that maxed out to the maximum of what people can pay every month. So homes that are going to blow away in 30 years anyway because they're all built like shit. Why do we need you? And then we have to go to war for you. And once the war happens, you rebuild it? Why? Well, it's 401ks. Well, you're just making the fees on those 401ks. By the way, those 401ks and IRAs that you're in and you're counting on, I just hope those managers are making the right decisions, because when repricing of stocks, when I talk about Railtown being repriced, my opinion alone, 10x for all the good that's been going on, up, stocks can get repriced downward. Now every stock you hear about has to trade at 40 times earnings, 60 times earnings. It's ridiculous. When I got in the business, I think it was 6, 7, 8 times earnings. And a high flyer was 20 times earnings. Every now and then you got one up to 30, and that was a real outlier. Now they're all up there. That'll change, boy. That'll change. It's unsustainable. It's going to come collapsing down anyway. Why not now? I don't know who runs Goldman Sachs, Mr. Blankenfield. Why not now? You're coming to me for the taxpayer to bail you out? You're too big to fail? Go take your licking. See if you can keep ticking. But I'm not going to help. Taxpayers not going to help. Well, they're going to lose money in their 401k. It's going to happen anyway. Let's just take our medicine now. I'm going to direct the full abilities of the United States government and industry and economy to rebuilding America. And I don't want to do it with Goldman Sachs and 6 hedge funds that control all the money. And all you've done is taken our assets to use them as collateral for derivatives. And you've determined, I mean, you guys don't think about what I read to you the other day. The Euroclear and the DTC, all of the securities, your securities, add up to about 130 trillion. inflated, all inflated by Stephanie Kelton's modern monetary theory. It's all inflated value. It's all crap. It's all the dollar bill that just, but anyway, that's what it is. 130 trillion. So that entire complex of securities is priced on the margin. It's a big chunk of the margin. It's the big chunk. But when when the bubble bursts and that collapses, the first few people are out. That whole complex will come crashing down, whether or not the taxpayer bails out Goldman Sachs. But that Goldman Sachs guys, they'll be in Monaco, they'll be in New Zealand. They'll be in the rarefied air of the penthouse suites at the top of those super tall buildings on Central Park. Their life will be fine. They couldn't give a crap about you. But Adina Friedman will be fine. That chick pockets $2.5 million a month. That's better than selling her wares on TikTok or OnlyFans that all the other women are left to. But what does she do for it? She doesn't protect CEOs, doesn't protect your wealth. She doesn't protect pension plans. She doesn't protect the price discovery of markets. She doesn't even protect that the American taxpayer is going to get a benefit for providing the country that these companies thrive in, but also for providing the banking system that these guys steal from. They don't even pay taxes. She doesn't care about that. You got to have more women on your board. Oh, there's a woman. She runs human resources. She's on the board. There's a woman. She runs investor relations. She's on the board. There's a woman. She runs the department that overlooks the human relations department to make sure that's current. You know, all of its weight. All of its weight. It's not productive. But thanks, Adina. Thanks for doing your job. When the $130 trillion worth of securities comes under pressure, I mean, I can think of two scenarios. 130 trillion is used, your securities are used so Goldman Sachs can create 1.5 quadrillion, 1,500 trillion. Your securities here and in Europe are worth 130 trillion. Goldman Sachs creates 1,500 trillion of derivatives against those securities. They're so greedy, there's no government that can bail that ass out. It's megalomania. Who's going to bail that out? So one thing is if the derivatives, just a part of it blows up, they're going to have to sell the collateral. Another thing is pensions. Another thing is pensions. To meet pension requirements, they may have to sell. Another thing is you, me. We have to sell just because we have medical bills. So what happens to that 130 trillion? I don't know the magical number, but what if 15% of it has to be sold at any cost? They're not going to sell it all at a valuation of 130 trillion. The first few guys might get that price, but the next gals, it's probably going to be at 100 trillion. And then at the end of that panic selling, it might be at 70 trillion. And as the information sinks in and people look at their pensions and people look at the other derivatives start looking at their collateral, it might be 50 trillion. And then the balls on these guys, they'll come back to us, the taxpayer. Hey, we're too big to fail. You got to bail us out. I'm telling you, if I'm president, I just say, you know what? Let it crash. I hope you lose everything, Blankenfeld, but they won't. They won't. But I would just, it's got to come down and start over again. It's not sustainable. But anyway, let's move on from that. Looking good, Leroy. What is it? Looking good. It's not Leroy. Looking good, Billy Ray. Feeling good, Louie. That's it. Louie. Looking good, Louie. Feeling good, Billy Ray. Got a late notification from you too. Great show far. Thank you. Sexy Nixie. Stacks, I would love it. For me, my hardest thing, I don't have a big position. It's kind of embarrassingly small. But at least it keeps me, keeps me in the game. But I'd love to get, for Nixie, I assume you're saying, I'd love to get 20 or 30 or let's say 18 or 24, something like that. I'd love it. But it's going to be so hard if I make the mistake that it's trade, let's say it gets up to 8 and it's at 70 million in volume. And I'm thinking, here we go. I'm not selling now. I just got to caution. That's why I drew those 2 yellow loops. When that volume happened before, it all of a sudden stopped and it never recovered. So you got to bear that in mind. I think third time's a charm. It could be, but I don't want you to have diamond hands on Nixie. I don't want you to have diamond hands. We'll play it by ear, but take money off as it goes up, and I don't know what your own strategy is, and I can't give advice. But for me, there's other things to put money in, like one of the most basic. I was actually talking to somebody this morning, and he was asking, he doesn't have a lot of money, but he hustles, and he wants to start building a long-term monthly plan to buy Bitcoin and the Bitcoin ETFs. That's, I don't want to give advice on that, but I said, Bitcoin could go to 1 million, but what is that from here? That's 9x. And I don't trust the ETFs. I think that's how Wall Street will leverage. They'll do derivatives against Bitcoin. Same crap. All funded by printed money, by Stephanie Kelton's magical, just print the money. She's an idiot too. But, Ben Bernanke printed money, but he actually studied the Depression. I don't know where this Kelton chick comes. She's a PhD, so I'm sure she's smart. At least she's good at passing tests. But I told him, I said, why don't you look at silver? Why don't you look at silver? If you could, buy 100 ounces of silver over this year, and we're running out of time. I think any day there could be a spike upward in silver. But if you could have 100 ounces of silver, cost you $3,500 right now. Maybe, with shipping, it's probably more, but 3,500, let's say $4,000 for 100 ounces of silver, $4,000. I think in the next 9 months or sooner, that 4,000 is going to be worth 12,000. Then I think there's going to be a financial market crash, and silver will volatilely be sold off because people are meeting margin calls elsewhere. Some people think silver will come all the way back down into the 20s in that case. I don't think it'll come back down under 50, but maybe down, let's say back down. It's conceivable your $12,000 come back down to $4,000. So maybe when it's 12,000, you sell a little bit and hope it comes down and buy it back. That's risky as far as I'm concerned, because at some point we won't really be able to buy silver inexpensively anyway. I'd rather just ride out the ups and downs. But anyway, that's one, those are strategies one can use. But after that crash, I think the central banks, the Stephanie Keltons of the world, will try her theory on steroids. And I think the central banks will spend, I don't know, $100 trillion. Well, they'll expand their balance sheets, I think, to $100 trillion worldwide. Just massive. And in that environment, it should work for a while. It'll kickstart things. But in that environment, I expect silver stacks over the next, let's just say 7 years. Let's say to the beginning of the 2030s. Just get into the next decade. I think silver, easily is $500. So your 100 ounces of silver are worth 50 grand. But, I think it could be worth $500,000. I think 100 ounces of silver could be your down payment on a home when home prices come down. And, obviously I talk about monster boxes. That's 500 ounces. I think a monster box could buy a house. Might even buy an apartment building if things go really haywire. Buy yourself a farm. Buy yourself, a coffee plantation. Buy yourself what do you call that? A school that teaches young people trades. There's a name for it. My stupid brain. Become somebody that helps others out. Of course, for me, I would love to take that and go out and buy a field of long-lived oil wells, conventional oil, and set up my nieces and nephews for the next 100 years. But that's what silver can do for you. So I really want these kind of trades, the profits can be ephemeral. I want to take that wisp, that fun, and start getting you to thinking that to me right now, the only asset tone, other than your health, other than your spirituality, other than your friends and family, other than your goodness, so that dogs love you, cats love you, cows love you, other than your daily gratitude for the blue skies and the green and your curiosity, the daily sunshine. To me right now, the only asset you should be focused on is silver. I don't know how much more time we have. And that's why I'm saying it over and over again, because once it's through 52, it's 100. There then will be assets, and my favorite thing will be the miners, all of the mining stocks, but it also oil and gas, But there'll be a lot of other things too. Anyway, let's move on. I was charged of firing. I would sell 1 million shares. If I were in charge of, Finger, I would sell 1 million shares when it hits 100. That'd be great. I love that idea. Thomas Gibbs. I thought the whole point of the last raise to be able to form the vehicle crown. Why would they need more? Okay, that's a good question. We don't know that answer yet. I think there will come clarity with the annual report, which is May 28th, according to Yahoo. But what we do know is the first, and you can find it in the news releases, but the first contract they got was for 2 vehicles. That was November, or was it October? I can't remember. So they paid for that out of cash they had on hand, as far as I know. The second tender, or if they're on the other side of the tender, I guess. Anyway, the second request for fulfillment under those contracts that are exclusive came, I'm guessing, in December. I don't know when it came, but they financed it in December. So your point is that $5 million net of fees and net of overhead, your point is that $5 million paid for all the money they needed to fulfill the C2 contract, which is the vehicles and drones to respond to emergencies, riots, natural disasters, war, whatever. For the entire country, a country of somewhere between 400 million and 1.4 billion, spreading across an area the size of the United States and containing the world's second largest economy in dollar terms, but possibly the world's first largest economy, unless all the bad things you're reading are true, in purchasing parity. So you're saying that government and all of the provinces, whatever they're called, and all the local governments, their demand for these vehicles can be fulfilled by $5 million. And in 120 days from that first fulfillment, that $5 million might turn into, making it up, $7 million. And so then the contracts can wait 100 days till they have $7 million. And however many vehicles get done then, the other governments can wait another 120 days for that 7 million to turn into 10 million in remittances and payments. So that's another 120 days. And however many vehicles then, everybody else waits while that 10 million then turns into 12,500,000. Another 100 days out. That's your thinking, that's that kind of deliberate approach, slow but steady. Maybe, I have no idea what each vehicle costs. Let's assume they're each, just for arithmetic, $500,000. I'm sure that's too much. But let's say they're each $500,000. So they did 10 in December. They deliver them to the government now, probably, because January was a holiday. And it's going to take 100 days from now to get paid and turn that 5 million into 7 million. So then they'll be able to do 14 vehicles. I think my arithmetic's right. And that'll take another 100 days to get paid. And that money will turn into, and they can do, let's say, 20 vehicles. So you're talking about all the way to the end of this year, they'll have done, and I'm making the numbers up, but I'm trying to illustrate what I think you're saying. That the entire government, national government of China, the army, the militia, the Communist Party, all of the regions, all of the ports, all of the trains, all of the airports, all of the cities, all of the borders, all of the ambulance, the fire stations, all of the country on this exclusive contract that covers that entire area can be fulfilled at that rate. That's what you're saying. I mean, you might be right. You might be right, Thomas. I don't think that's an investable company. Of course, I'm making these numbers up, but in your scenario, they'll get, let's say they did 10 vehicles in December that are going to be paid for this year. And then that increases to 15 that'll be paid for maybe beginning of September. And then that expands to 20 vehicles, which should be paid for next year, but maybe they can book the profits. So you're talking about building out 15, 20, and 10. So that's 25, 45. Call it 50 vehicles a year. Growing, albeit it'll be growing each year. The profit margins might be 15%. So the capital required to do, in my example, I don't know, it's the magnitude, not the exactitude. 50 vehicles times 500,000. So they're gonna be rolling 25 million every year, and it'll be growing. And let's say the profit is 15%. That's 3,750,000. They've got 60 million shares outstanding. That's 6 cents a share. I don't know, Thomas. I don't think your strategy is a very good one. I think the best strategy for finger motion is to fulfill all of the contracts, because under your strategy, they run the risk that they get competitors, because they can only do 50 vehicles a year. Well, I don't know what the number is, but China might have a demand for 1,000 a year. But you're suggesting finger motion should just, they raise the money, don't raise any more. Well, then the contract will no longer be exclusive. They'll go down the street to somebody else. I think that's a bad strategy. I think Finger has to take advantage of this contract. I think Finger has to do everything it can to never tell the government, no, we can't fulfill that contract. Every time the government asks for a new vehicle, they have to say, yes, we'll get it done. And I think that requires money. The good news is, after the first, I don't know, I think it's going to take 3 cycles at a minimum. Maybe it's 5 cycles. It'll become self-fulfilling. They'll never have to raise money again. It'll be just, but maybe you don't understand what I'm saying. In the future, they build 200 vehicles. In cycle 1, they build 200 vehicles, they deliver it, and they're paid in quarter 2. But one of the cycles from last year hits in quarter 2. That's not this one, so they can start cycle 2 and then deliver and get paid. And once cycle 3 comes, cycle 1's paid for, they can deliver that. And it becomes self-fulfilling. But they have to get to that point, Thomas. $5 million ain't going to do it. It's just not going to do it. That's my opinion. You might be right. I know a guy, you know a guy, who says you're a basher. All right, I didn't know. David, I think you're right, because there is no filing. And guys, all that stuff I'm talking about, that is not relevant if there's people trapped. Look, there's the Anson funds who short, and they do it through Lynn Partners, Jeff Easton, apparently. But then there's these greedy little bastards that come around like gnats, and they just they have access to a crappy, non-existent market maker, and they abuse it, and they sell stock where they don't have any money, they don't own the stock, and they get underwater. And these guys like JP get paid to bail out, some guy that pumps iron at the gym all day, goes to the bar at night, snorts some cocaine, gets laid, drives his white car home, and then, rolls over, not now, honey, clicks on his computer, calls in, anything going on. And the boiler room is selling stock, and well, there's a stock here that's it's called the symbol's FNGR, and it's up 100%. Well, let's sell some. Turn on the computer. There's another one here, G-Bucks. It's up 10 times. Sell. They don't study it. They don't do anything. Their methodology is just to sell on everything. Everything. So if Finger Motion can get this contract financed in the medium term, that could crush them. But if they're in trouble right now, they have no money to deliver. If they shorted Finger at $1 and now Finger's $3, just in the short run, just the real short, that can cause buying Monday morning. I'm not trying to be at all negative. On the other hand, I am trying to be realistic too. David says, look at all the shills here trying to say crap about Finger having to raise. I'll trust him and his knowledge over these scumbags here trying to stir the pot, I guess, probably working for Fidelity. Let me just see. I don't think Ham's called back. No. He might be trying to get that flight. The flight would have been, he'd have to be at the airport around now for that flight. He might be trying to do that. Hey, Zizu. I'll listen to him, who knows an investor who owns 4 million shares, reached out to Finger and wanted to buy more shares, and Martin said, no, thank you. Seems to me they don't need any money, in Ham's opinion. Yeah. That's one way of interpreting that. God bless you. So I was thinking, if we squeeze to 100 or more on Finger, I can hold my $15 call and sell 15 shares at 100. No, Aaron. Don't make it complicated. What you're describing is as if the calls don't have a market. Sometimes warrants, for example, do not have a market, and what you're describing might make sense, but you're just making it too complicated. If the stock were to go to 100, I don't personally, I wouldn't hold calls. I don't know, you don't tell me the expiry date, but there is a chance, however small, that Finger Motion could do what you're saying in the next 2 weeks. I'm not going to draw it because I'm not sure of the date. I don't want to screw it up. But I think the options expire May 17th. So you have tomorrow, you have all this week and next week for the Mays to expire. Everything above $3 is going to go no bid. There'll be no bid on those calls sometime in the middle of this coming week. If the stock stays under $3, there'll be no bid on the $6 calls, no bid on the $7 calls, no bid on the $8 calls, possibly no bid on the $3 calls if the stock stays under 3. Monday, Tuesday, Wednesday. But if the stock starts trading up, which it could, I'm not saying it won't. If the stock were to go to 4, well, there'll be bids on the 3 and maybe the 4s. But as this time premium starts disappearing, the option computers start figuring out, well, there's only a few days of time premium left. We're not willing to pay up. So the bids still disappear. So you just don't want to hang on to those calls. You want to get out of them when there's a profit. Now, let me go through. You're thinking, all right, I've got a call for how many? 15 contracts or 15 shares? Well, 15 contracts. So 1,500 shares. So I've got 15 contracts. I'll exercise them. I have 1,500 shares. And that, it makes no sense. just sell the calls. You get the same price. 15 calls at $1 times 100. It gives you actually probably more money than if you had exercised them. In my example, let's say at 2, sold the stock at 3, but you got all the friction and the risk of time. You end up with the same profit in your account. Just sell the calls. Just sell the calls. Hang on to the stock if you want to. The only reason I can see to try to hang on to the stock is you want to have long-term capital gains. But I think we have to be much more willing to take short profits. I mean, fingers up 100%. Darn good. I'm not saying sell it. I'm not giving you that. I'm not just, unfortunately, everything I say can be misinterpreted. But we have quite a bouquet of stock choices right now. And I think you have a rose in silver. So there's places to go. But no, I think your strategy is idiotic. And I say that politely. I'm not picking on you. The strategy itself is, you're just overcomplicating. They're two different securities. You own stock and you own the calls. And even if I think you're saying that they're in January, I can't quite read that. So even if they're in January, if they start running up, sell them. By the way, January is the same thing. Do you understand that you're paying, when you buy a call, it gives you the right to call the stock at a fixed price in the future within a specific period of time. So what's in the price of a call option is the intrinsic value of the stock. Stock's trading at 250, and you buy the $2 calls, 50 cents is the intrinsic value. But you buy the $2 calls in January of 2006, I have no idea what they're trading for. You might pay $1 for that time value. You might pay $2. If you're trading Tesla or Nvidia, as he calls it, you might pay $5, $10. But just for my brain, let's say you pay $1 for that privilege of having that call all the way through January. But if and I'm not saying it's going to do this. I'm not saying it's going to do this. But if the stock ends up trading between 150 and 250 for the next 6 months, that dollar premium is going to come down. You're just buying hope. And I'm not saying it's bad to do it, but you got to know what it is. It's time premium. Now, in the case of Finger, I said it last week, middle of last week to people. I said, why not sell the $4 calls at 20 cents for May? 20 cents, that's an incredible, the bid's going to go away. So what happens there? So when it's a short time premium, you are paying the time premium, no kidding. But the $4 have 20 cents on them? You're paying also speculative premium. You're paying the premium that everybody thinks it's going to squeeze. And it may be there are people trapped. I'm not saying that's not true. I'm trying to explain a concept. If the shorts are indeed trapped, one way they can protect their risk is buy those $4 calls, and they may be the reason that premium's in there. It might be a fear premium rather than a greed premium, but it is a premium, and it will disappear by definition. By definition. All of that premium will disappear, I think, next week by Wednesday, but for sure at expiration, if the stock doesn't go above 3 and stay above 3. Now that's, Ham's strategy is to buy these close-in calls because it costs less. And if you lose, you lose. And then the next month it still is cheaper. And his idea is, well, if you don't hit it this month, it'll be next month. Your idea is to buy, not you, David, but to buy the Januaries, and that way you're in all the way, but you're paying a price for that. You're paying a price for that. Calls they're expensive. All right, I want to, it's 3:30. I want to talk about a couple of things. I know everyone gets annoyed with me, annoyed. All right, I showed you this the other day. All right, let me get this comment down. I showed you this the other day. This is silver's. This comes from David, the Morgan Report, which you can subscribe to, and I highly recommend. Silver has been in deficit for 5 years. And the cumulative total of that deficit over the last 5 years is slightly greater than the annual mine production of silver. Annual production of silver is 800 million ounces per year. And the cumulative, when you stack them without adjusting, the balance and the deficit, this is what happened, demand versus supply. The middle one is adding up the deficits. I don't quite understand the distinction, but it's a minimal distinction. The point is that the deficit total for the last 5 years is essentially equivalent to the annual production of silver. I think that sets up sometime very soon a crisis in the physical markets of silver. And then we'll be run out of time. I want to quickly show you this. This comes from Martin Armstrong. Now, he has a computer, the original AI computer, I suppose. And he makes predictions, and he's been right for years. That little orange box down there in 2026, down at the bottom of the page, that orange box, that's his call that his computer is highlighting dislocation, possibly war, financial crisis, but something huge in the course of human events next year. I'm telling you my opinion, we're running out of time. We can keep talking about these little pissant stocks, but we're running out of time to get our own house in order, become our own central bank, become our own island in the storm. All right, now I want to just show you this. These are the countries who produce the most silver. And número uno es México. México is número uno. Número dos, número deo. Anyway, second or almost second is Peru. You can see why the Spanish were so rich. Mexico's number one. Peru is number two. But really, it's China that's number two. But, you know, whatever. The top three producers of silver in the world are Mexico, China, and Peru. Russia comes in there. Poland comes in there. Bolivia, Chile, Argentina, Australia, India, and Nevada, it looks like. But it's basically those three countries. Here's the list. Mexico produces 202 million ounces of silver a year. China produces 109 million ounces of silver a year. Peru, 107. Chile, 52 million. Bolivia, 42 million. Poland, 42 million. Russia, 39 million. Australia, 35 million. USA, 32 million. Argentina, 26 million. India, 24 million. Kazakhstan, 17 million. Sweden, 13 million. Indonesia, 10 million. Morocco, 9 million. Wow, that's pretty, I didn't know that. Uzbekistan, 8 million. Canada, 7 million. Papua New Guinea, 4 million. España, 4 million. And Brazil, 3 million. Let me show you another chart. This comes from CAT USA Research, and David Morgan supplied it. And his service is called the Morgan Report. Highly recommend that guy. Anyway, market size comparison. This is for the miners. This is the mining. This isn't the physical asset. Mining industry. And I want to call your attention to this. My brother would tell me that the crypto market is going to get much, much bigger, and that may be true. But if we start over here with the oil and gas industry, which I know pretty well, the oil and gas industry worldwide, $7 trillion. That includes Aramco, that includes Exxon, includes Chevron, BP, CNOOC. But anyway, the world's oil and gas industry is 7 trillion. NVIDIA, all by itself, is almost 3 trillion. The crypto universe is 1.5 trillion to 2 trillion. Tesla, all by itself, is almost 1 trillion. And then you come down here to the gold mining industry, which is 0.5 trillion. I'm telling you, even if I get 10 of you to listen, gold mining shares, I also think oil and gas shares too. I can't tell you about Tesla or NVIDIA. And crypto, I'm going to learn as much as I can. I like it, but I just want to point out that gold mining industry, People are going to make fortunes in mining stocks. It's $500 billion for the whole industry. For the whole industry. The whole gold mining industry has a market size less than Tesla. And then you come down to the silver mining, which Tesla needs, crypto needs, NVIDIA needs, and believe it or not, there's aspects oil and gas needs. Come down to the silver mining industry. It's less than 1/10 of $1 trillion. This is an area where, if I'm doing anything, you and I are going to be focusing on the miners, silver and gold, and I think you're going to make 10x and much more in these areas over the next. It may not be like these GME, but over the next years. All right, and I want to give credit to the one company here. This is published from, I forget the service. Sorry, but the company that helped do those charts. So this is the bottom wording. Mexico retains its lead. Okay. China, Peru. I read all that to you. Mexico's dominance in silver mining dates back centuries, with its reserves continuously tapped to meet demand. So anyway, I just want to give credit to this company, Vizsla Silver Corp, because they sponsored that work on that chart. So I just want to give them credit before I move on. Vizsla Silver Corp's Panacu project in northwest Mexico. That one mine or reserve contains 200 million ounces of silver. I want to call attention to many of you who invested in that gold company that we're still waiting on. That's the target. It might be a midpoint. That's the target for the gold resources in that company, 200 million ounces of gold. So, I know it's taking time, but I think it's going to be it has the potential to be a spectacular investment. All right, let's get off of mothers. That's what I wanted to tell you. I had something else I wanted to mention. Let me see if I can find it. Ham has not called back. So let me try to stay on for a little while in case he does. Oh my gosh. A missile slams into Israel's international airport. That cannot be good. Apparently, we're in competition with China, almost a Manhattan Project in AI and in quantum computing. Who would you rather? Well, I don't know. Actually, I don't know. Let's just see. Though the election in the UK had a dramatic effect. I was going to go through the there's a list of 100 days of hoaxes from the mainstream media, you know, because Trump and truth, oxymoronic, but the media, 100 days of hoaxes. I don't want to get into that. Okay. It's going slow on me. Yeah, all right, I'll skip that. New lawsuit against Trump by Letitia James. A judge says that non-American citizens can vote. It's a Clinton judge. Let's see. Yeah, it's a woman. I was going to say it's a woman, but I was caught myself because I didn't want to insult. But it's a woman. I'm telling you, women think differently than men. And I'm sure they're right, but they think differently. I guess the idea is if you're in the United States, you might as well vote while you're here. Womans can't live with them. Pass the peanuts. Do you think Finger will crash or go flat from here? I don't think it'll crash. I think Finger looks pretty strong. I don't think it'll crash. I don't know where while I'm talking to you, I don't know what the price is, but let's split Finger into two stories: the fundamental story, as best we understand it, and the short squeeze story. On the fundamental side, let's say it's $3 right now. I think it could go to $3.50. I'm not so sure. I'm just talking about the fundamental side. I'm not so sure it would even get to $4. And I think it's highly likely that they're going to raise money through Roth Capital. And let's say it goes to $3.50 and the Roth Capital does a 30% haircut on the stock, just like they did in December to get the deal done because they're shitty investment bankers. I think it could go. I don't know about $2, but I think it could go to $2.25 to get that deal done. $2.50, $2.35, and they'll brag about it being at the money, and they'll say it's just warrants. It's not, toxic formula. Well, these at the money contracts are derivatives. They're set up for derivatives. So anyway, that's the fundamental. And then once they have the money, I think it's great. That's going to hurt. But I think having that money means they can keep performing on the C2 contract and growing and getting bigger and bigger and bigger and having profits. And remember, Martin said that he expected maybe fourth quarter would turn profitable, which implies that this whole year will be profitable. I think there's a great fundamental story in Finger. But it needs clarity. It needs execution. We have to understand that China and the United States, at best, are in a temporary trade war. At worst, we're going to go to war over Taiwan. So, there's some risk there. China's economy seems to be in the crapper. Yet, to get out of that, there is government spending. So maybe that works to the benefit of this contract. Government spending is how you prime the pump and get the hell out of your depression or recession. So fundamentally, I think finger motion controls its own destiny. I think finger motion could have a really exceptional 2026, which is this year. I think this can be a transformative year for finger motion. And I think we can make a lot of money with finger motion. All right, now let's go to the short squeeze. The short squeeze could be happening starting tomorrow, or it could be, my view, it could wait until positive earnings, and then nobody's going to want to carry a short position. They'll run away from it. And Benjamin, I'm sorry to repeat myself, but I believe in this market that most of the short squeeze are under control. I mean, I don't know, it's something about the human brain, not your brain, just the human brain, that needs to hear things 7 times before it sinks in. That's a study, by the way. David Rogers Webb did a movie called The Great Taking. According to Webb's research, the global financial system has increasingly engaged in a practice where all securities, stocks, bonds, and other financial assets are used as collateral by the world's largest banks. This practice is called collateral management. Baffle them with your bullshit. And it is carried out without the explicit knowledge of individual investors and institutional funds. The financial securities are pooled, mixed in together, thrown in a bucket. You and your buddies are at a bar, and they decide to bet on Arsenal versus Chelsea. And a guy's going around the bar collecting pounds or florin or dollars to bet. And everybody, 200 people in the bar bet. They put their quid in the bucket. They pool their dollars, their pounds. Before the bet, everybody owns what they put in that bucket. But you're not going to get that exact pink Australian dollar back, or green US dollar back, or pink 50-pound note back. You get something. You have a right, before the match is over, you have a right, or you have a claim to the amount you put in, but it's not the exact amount. It's not, I mean, it's the exact amount, sorry. It's the exact amount. It's just not the exact physical piece of paper you put in there. Now, the match ends, and one side wins, the other side loses. That's a separate situation. Well, let's say that the guy going around is called Goldman Sachs, and he's got the bucket, he's collecting all the bets, and he's put it in this beer bucket. Now let's say the match starts at 2, and as soon as he has all the money, everybody else is drinking, he doesn't drink. He runs down to the betting shop, and he puts the entire bucket on the Kentucky Derby. He says, hey, I can't leave this money, but here's my collateral. He says, all right, you're Goldman Sachs, check. And then he takes the bucket and he's skipping back to the bar, and he sees another betting shop. He goes in and he bets on the Foreman match, or whoever's a boxer now. The same bucket of cash. Hey, I can't leave it. But you're Goldman Sachs. That's all right. And so he goes back to the bar, and while he comes in the bar, he's still holding that bucket of cash. He gets a phone call from his bookie. Hey, this is Morgan Stanley. We think you should bet on the Yankees. All right, put it down. Put it down? Put me down for that. And he bets on the Yankees. So now he's taken that bucket and he's tripled it. Actually, he's made it. There's 4 bets going on that pooled set of assets. Most of the time it works out. His Morgan Stanley guy is always right. His quant people are usually right. So when the football match is over and Arsenal wins, he only has to pay out X amount of that pool. I don't know. I can't make up. I'm not a bookie. And he keeps the rest. So he's got some cash. He paid it out. So some of his collateral now belongs to him. Maybe it's 10%. I don't know. Whatever it is. The vigorish belongs to him. And then he goes back to the first betting shop. I forget what he bet on now, but he wins. So he's made money there. Goes to the second betting shop, and he wasn't so lucky. Might have lost there. Darn it. And then he comes back and he's waiting for the Yankees to come in, and maybe he wins there. Well, this is Goldman Sachs. He is using your collateral from the bar to giantly increase his wealth. And he does. But every now and then, Maybe at the bar, he accepted too many bets and there's not enough to pay out when the wrong team wins. And maybe all three of his other bets go pear-shaped. And he's at risk of going out of business, so he goes to Barack Obama, and Obama bails him out. So that's what pooling is. And these all securities, stocks, bonds, and other financial assets are pooled. It's called collateral management. The securities are pooled in centralized depositories, the DTCC. Securities are rehypothecated multiple times. They make a dozen bets, creating extensive collateral chains that contribute to the rapid expansion of the derivatives markets. A collateral chain, it's in the example I tried to create, it's 4 big bets on 1 bucket of collateral. It's not a chain. It's a gamble. This was legally formalized through the 1994 revision of Article 8 of the Uniform Commercial Code in the United States. This legal framework, Bill Clinton, remember Bill Clinton, truth and Bill Clinton go together. These legal frameworks effectively transferred ownership of securities to central depositories, stripping investors of direct property rights and putting their assets at risk in a crisis. So again, that Goldman Sachs bucket at the pub, they put it at risk 4 times. The original, which should be pretty safe, but 3 more. A market crisis would be all 3 of those bets didn't work, and in the bar, they didn't collect enough money for the payout because the underdog won. Where do you go? You go to the taxpayer, because Goldman Sachs is too big to fail. So to legalize this activity, the revision in 1994 created a concept of, quote, securities entitlements. Securities entitlements, which replaced direct ownership of securities with a contractual claim. You got a little stub that said, you bet on Arsenal. 5 quid. 3-1. Waterstones or whatever it is. I think that's the bookstore. So you have an entitlement, you have a contractual claim, effectively allowing central depositories to utilize securities at will. So Bill Clinton said to Wall Street, use America's assets at your will. To the whole financial system. You know, to the African Americans who run the financial system, to the women who run the financial system, to the Asians that run the financial system. I won't go further. Rehypothecation, the practice of reusing, stealing, fraudulently. I mean, if you did it, you'd go to jail. The practice of reusing pledged collateral to secure multiple obligations, fraud, lies at the heart of this scheme. When banks engage in derivatives trading, ping pong, one 26-year-old, hey, I think it's going there. The other 32-year-old saying, no, I don't. They get stoned on other sides of the world, get laid in the morning. They're so nervous, they leave the office drinking coffee, buying art. They come back to see what happened. Trading, betting, derivatives trading. They use securities held at the DTCC as collateral without the investor's knowledge. The U.S. Federal Reserve acknowledged this, stating that investors do not have rights attaching to particular securities in the pool. Instead, they only hold a pro rata claim to a collective securities pool, effectively making them unsecured creditors, the worst position to be in the event of insolvency. The legal and regulatory structures introduced here by Bill Clinton effectively turned securities ownership into a form of indirect claim. Rather than having outright ownership, investors are granted a claim. This allows Goldman Sachs, in my example, financial institutions to prioritize the financial institution's own interests when using these assets. If a major financial crisis occurs, the first right to the underlying securities would go to the secured creditors, who are the other side of the derivatives contracts, the other banks, the other hedge funds, not to the investors themselves. So what I think happens in the system now, one, they don't want people to understand what they're doing. Two, it's just become a matter of practice not to enforce settlement. Three, if one guy, oh, they don't know each other, it's just coincidence. Anyway, if one guy gets in trouble, the others help out. It doesn't always work. It doesn't always work. How does G-Bucks go from 75 cents to $12? It doesn't always work. How does GME go from $4 to $500? It doesn't always work. But all of these banks and hedge funds and criminals have a vested interest in making sure this doesn't get out of control. And so does Adina Friedman. So does Ann Wagner. So I am, I'd like to say it's a flip of a coin, but I'd say the odds are less than a flip of a coin that finger motion starts squeezing tomorrow. That's how I feel about it. It feels like it's under control. However, now let me go to the other side of it. When I listen to him with you, I mean, there's some compelling things there, and I get caught up in it. Secondly, the volume in the stock has been really strong. And thirdly, the price has gone up. So it can happen. It can happen. But I'm telling you, Benjamin, I would I didn't have the money. I'll just tell you what I would have done. I was saying to you guys when the stock was $1.04 and onward that it was looking good. I was drawing things saying, I think this is it's a good time. I'm not quoting exactly, but it was many, many times. If I had money, I would have purchased the $1 calls and the $2 calls. Now, probably I wouldn't have ended up with very much, but maybe I would have ended up with 10 of the $1 and 20 of the $2 or 30 or something. But I didn't, because I didn't have the money. I was expecting some money. It never came, and I didn't do it. Well, I would be long out of the both positions. I'd be long out of them. I probably would have gotten out last week at the latest, maybe the week before, but when it hit 3, I'd be gone. I would have taken my profit in the $1. I'd taken my profit in the 2. What would have I done? Probably bought the $3, or yeah, that's what I would have purchased, is this $3. I would have gotten nervous that the $3 only have 2 or 3 more weeks. So I put in my pocket my profit, my original money, maybe a little bit of profit, and I'd buy a handful of the 3s just in case it squeezes. But I would save some money so that after 2 Fridays from now, that Monday, I could buy the Junes, and then the Junes, that might have a real shot. I've told you all along, and you guys, some of you get mad at me. And I did say the stock could double or triple, and it has doubled. From $1, it tripled. So I was right. But I've also said that I think the catalyst for bigger moves comes after either a big clarity, a big surprise in the story, or just clarity in the story, and the stock price jumps to a new level and stays there, and that puts pressure on the shorts. And I have said for months that I thought this had to wait until after. I'm going to summarize everything with one word. I didn't say it this clearly, but until after the annual report. I said it in long explanations. I don't want to go back through it, but basically until after the annual report. And I wasn't wrong. I said the dividend would wait until I wasn't wrong. Everyone get upset with me. I'm not trying to say I'm such a great sleuth or anything. I'm just saying that it's pretty obvious in some ways. And I'm not negative on it. So no, Benjamin, I do not think Finger will crash. I don't know what you mean by crash. I don't know how long your question go flat from here. I think on the fundamental side of the story, the most likely event is you're going to see the stock try to get to 350 tomorrow, maybe Tuesday. And then Roth Capital is going, or Anson funds are going to be selling shares that don't exist in order to fulfill a financing. So Roth Capital is basically going to be giving Finger Motion its own money and collecting an investment banking fee. And in that case, I would expect the deal to get done at $250 a share. I don't consider that a crash, but maybe you do. I think in that instance, the stock might be under pressure because everybody's disappointed. It might go flat, like you're saying. But if let's say Roth Capital announced that next week, I'm not saying they will. I think Roth Capital should wait till after the annual report. But even if it got done, I don't think Finger's going to stay flat for very long. It's amazing the lack of thought people put into their investment. Finger Motion, what is the value of the stock? The market cap of Finger now is 155 million. So it's doubled, more than doubled. So the market cap of Finger right now is 155 million. To my memory, and I just don't want to go look it up. I really don't. Their revenues are running at about 35 million a year, last 2 years. I'm giving you one way to look at it. They don't have earnings, so let's just look at the revenue. 35 million. So one metric is the stock trades at 4.5 times revenue. Is that a good number? Could be. 4 times revenue could be a good number. Why? Because their revenue is growing and they're about to turn profitable. But I don't know the metrics in the assembly of emergency vehicles space. I don't know what the metric is. You have to build an assembly line. You have to buy vehicles. You have to have a team. You have to gain efficiency at it. You have to install and create, build, and install the satellite slash Wi-Fi, whatever it is, systems that you attach. I don't know. I don't know what multiple that gets. Tesla gets a big multiple, but Ford doesn't. But I think it's reasonable to say 5 times revenues might be a reasonable number if they're executing that contract, especially since Finger also has the top up that's there steady on. They have the rich communications. I forget what that's called. That's there that can grow. They have the cloud that can grow. They have the insurances that can grow. They have big data that can grow. So they have a lot of bells and whistles that can be added to that C2 contract that can give you a higher multiple per revenue. But Finger, make no mistake about it, Finger's going from, you see the girl sashaying down the street. She's got a great rear end. She's got great tracks up front. Her hair looks good, beautiful smile. She's always happy. You're in love with her, and your world is going to be great. Finger's going into the stage that she's gone out with you 2 or 3 times, and it turns out she's always rude to waiters. She's always whining. She doesn't smell quite right. She's always on her phone. She's late, and her laugh is annoying, and she's not quite as pretty when you really see her up close, and you realize you're bored with her. It's a different metric. Finger is going into a different metric. It's not bad. But Finger's going from that anything is possible multiple to, well, they're an assembly line for emergency vehicles. It's communications. They get an ongoing data contract from it. So it's a bit of a hybrid. They assemble vehicles, there's a word for it. They put them together. And this locks in government data contracts for every vehicle forever. So what multiple do we put on that? I don't know the answer. That's why we wait. We have no choice. I think Finger Motion at these prices, that's a pretty fair valuation already for the assembly line aspect of their contract. What multiple do you put on the growth of the satellites and the data and the collection and all that? I don't know. We have to wait for the annual report. We have to read what the projections are, better description. We don't have it. What's the multiple that you can put on top up? 1x, 2x. So we kind of know where that is. What multiple can we put on insurance contracts? We don't know, but I think big, but we don't know what those are yet. What multiple can we put on the use of the cloud? Probably very low because it's sporadic. It's not repeatable, but we don't know. What other big data contracts will they get? We don't know, but if they get them, that might get huge multiples like SNOW. But here you see, Benjamin, you're asking the impossible. I'm not a retail an analyst in the communications space, in the insurance space, in the automobile fabrication space. I'm not an analyst in the top-up business space. I'm not an analyst in the China space. I don't know what multiple you put on this revenue. But I think the revenue is going to be growing. How much is it going to grow? We won't know until we get the annual report, the Roth report. We don't know. And so it's an impossibility. But I do think Finger Motion has the potential to have a great year. And that means the stock price is going to go up and maybe up dramatically. That's the fundamental side. I do think they're going to do a financing, which is going to be a haircut, probably, initially. What are the risks? It's China. China might ban all. Look, they're going to war. The world is going to war. Europe is going to go to war with Russia. Benjamin Netanyahu is going to get the United States into war against Iran, Syria, Lebanon, I mean, I hope it, Yemen, I hope it doesn't go further. Saudi Arabia, I hope it doesn't go that far. But Benjamin Netanyahu will get the United States into the war in the Middle East. And it looks like while we're distracted, China may try to take Taiwan. That's a risk. I hope not. I hope your prayers work. And I hope the truthiness of CNN and MSNBC and New York Times and the Clinton and Obama and Biden apparatchiks keep us out of war. I hope so. Hell, we might even go to war with Canada. So I wouldn't count on finger motion being immune from the blowback of war between the United States and China, whether it's hot or it's intensely cold. But for the time being, it seems to be okay. I think if financing would be done at 250 and a lot of warrants and derivative protection. Tomorrow, finger motion could open up dramatically. There's pressure everywhere. And there's a lot of buying interest. Apparently, there's a huge short squeeze potential. It could be that people out there know what the contract is or know what other financing is or know what's coming. There could be something coming out of the blue. And tomorrow, finger motion could open up the 3, go to 4, go to 5, and start to run. Absolutely. Could happen. And a lot of the things I hear that Ham said to you make me think that's, and the way the stock's traded, make me think that's very possible. If Fidelity told that investor it's a short squeeze, if they said that, that's a pretty clear sign there's some trouble. But Benjamin, I can't blow smoke up your ass. I don't want you to lose more money. You have to start taking profits and keeping. My understanding that is that from a young age, particularly families that raise their children to go to the financial markets and happen to be Jewish, the number one rule, and Warren Buffett too, he's not Jewish. Number one rule, don't lose money. Don't lose money. I know a lot of tight-ass Irishmen that are that way. Don't lose money. Every landlord you've ever had's that way. I'm not going to lose money. So don't lose money. And you know, this move in finger has been terrific. It tripled. G-Bucks went up 12x, 15x. And we want more. Maybe we can't get more. Anyway. Benjamin, just because I think something doesn't mean the stock is going to do what I think. And there's a lot of information that gets my blood roiling that finger is going to move. And I wish I had a huge position. but I guess about 3 weeks ago, I've read it to you almost every day, but 3 weeks ago, finally in print, I saw something that confirmed what I was suspecting all along. I've been talking about for years to you that they're treating the securities market as a fractional reserve system. And I think I think it's very hard for stocks to squeeze. I cannot figure out, Benjamin, why Fidelity would buy in anybody if all they really have to do is adjust the ratio of hypothecation to the amount of, because you don't understand it. They own, Fidelity has a certain block of finger at the DTCC. It's in the name of Fidelity. Let's say it's 1 million shares in the name of Fidelity. Because of Bill Clinton's signature or his administration, those 1 million shares can be used by Fidelity to Xerox them. They can print 5 million shares. Basically, they're making a credit decision. It's a credit decision. It's a derivatives decision to lend out those shares, lend out 5 million shares against the 1 million that they hold in their name. It's illegal according to securities law. Even Reg show it's illegal. But the UCC allows them to create derivatives, lend them out 5 times. I don't see where in the normal course of action, Fidelity is going to change its credit decision, all things being equal, to screw themselves. It's like a bank loan officer in the fractional reserve system loaning $100 million to Donald Trump. Oh, Donald Trump, in truth, it's oxymoronic. Lending $100 million to build Trump Tower or Trump Casino. And then that goes bad for whatever reason, I forget. The stock market shorted the hell out of the stock, but the banks didn't call those loans right, at least right away, because they're shooting themselves. Eventually, it all went bad. But I just can't. I've been thinking about it for 3 weeks. I can't see why Fidelity would change their credit decision. They lent out 5 million shares against 1 million. Why would they change that decision? They might temper it, say we're not going to lend out anymore. We don't want to go. We're not comfortable at 6 to 1. We're feeling increasingly uncomfortable at 5 to 1. They might slow that down. And then they might start trying to reduce it. The word might go out to the stock loan desk. We want to pull this back to 3 to 1. But I don't see why they buy that all in. All things being equal. What could change it? Well, the stock's tripled. And there may be some, Fidelity's not the only short out there. Anson Funds isn't the only short out there. There's day traders like these sons of bitches that come on here. Benjamin, do the math. Sit down when you're bored. Pull out a yellow pad and just do some math. Make it up for your own self, as they say in the South. Some parts of the South, as they say in Lynchburg, Virginia. Some people in Lynchburg, Virginia. So you're this guy that just came on earlier, and he's a shill. Junior. You have no money. You have a house. You have 2 cars. You have a wife, but the secretary's been fun. And there's this new venture, this new woman who started on the trading desk, and things are going well there too. You're working out. You're making your own bets. Your mother's unfortunately in the hospital and you're paying for it. You got credit cards. You travel a lot. You take your wife on vacation just to assuage your guilt. So you're making $1 million a year, but you're spending $1.2 million. You're under stress. So your business, what your business is someone taught you how to do this. You got the computers, you got TradeStation, you got whatever sophisticated level 2, level 3. You've got access to a market maker. You have a line of credit. You've been doing this for a while. Alpine extends you some credit. The Goldman guys send you some. You even you're in at Canaccord for sure. You're in with a couple of groups in Germany, but you've even got a line of you got into the prime broker at Morgan Stanley, amazingly. So you've got these different places you can trade through, and you do it through 2 market makers. One is ASCM and one is ETRD. So you got all the computers set up, but you got to make some money. You're really in trouble. You got to make some bills. You're not worried though, but this month you're going to ramp it up a little bit. And this piece of shit stock, finger motion, you got this guy talking about it. You got this crackhead. Tony DeNaro points it out that this guy on YouTube, he's a crackhead calling for 2,000. I mean, this is a joke. So this stock's come down from 4. It's down at $1.05. Our good friends over at Anson Funds just did the financing and they got it done at 150, but they got warrants in there, so they're trying to break $1 on it. And they asked me to help out, but you know what? They said they'd back me if I did a little bit, but I need to make some money. This stock's going to break $1. It's a piece of shit anyway. It's China, and what is it? It's top-up business. It's all crap. They don't do a lot of thinking, these guys. These guys don't do a lot of thinking. All right, let's sell. So, Benjamin, you do some arithmetic. This guy needs to pay 10,000 is his monthly nut. And he'd like to make $5,000 from this trade. So he starts shorting finger. Once the Anson Fund deal goes through, it's broken $1.50. He starts selling. Let's say he gets 10,000 shares off selling through his market maker without any money. without any shares. Let's say he sells 10,000 shares at an average of $1.25. Well, he's trying to make 5,000. So when the stock goes to 104, he says to himself, hey, I'm halfway there. I'm almost halfway there. He believes his own magic. And he says, let's sell another 10,000 here. So then he's short 20,000. And he just needs the stock to go to 175 to cover. He makes his $5,000. What did he risk? He didn't put up any money. Did he get his hands dirty, his fingernails dirty? No. Did he have to sweat, get a suntan? No. Did he have to punch a time clock? No. Did he have to paint something? Did he have to build something? Did he have to create something? No. He just took a bet and he doubled down on it. Well, let's say that Anson Funds is guaranteeing the first 10,000 under some scenario. And let's assume Anson Funds didn't say as soon as it's $1.05 cover. So because I think Anson Funds would limit its risk. Remember the first rule taught to all these people, don't lose money. The next one is always negotiate. Negotiate, negotiate. The third one is argue, argue, argue. The fourth one, keep your eye on the prize, distract, 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 keep moving to the prize. The fifth one, don't ever take no for an answer. None of them are your friends. Your friends are here among the chosen. And it gets competitive. So some of them lie, steal, cheat. But always be saving money or incrementally making money. Always. Always. Don't pick up the tab. If you do, make a big show of it so that everyone knows that this one time you're picking it up. But if somebody else, you go to pick it up, make a show, and someone says, no, let me get it, you say, oh, no, all right, well, really? You'll do that? Great, thank you. I would have done it. Don't spend money. Get everything on cheap. Oh, I got my house. It's on the go. I was just able to pick it up for paying the back fees back when there was a downturn. And now every Thursday I can come to the club. If I get here by 5 on Thursday, I can buy a tuna sandwich, a large tuna sandwich, hoagie for half price. I eat half, I take half home to my wife. But you're worth $20 million. Yeah, but hey. This is the mentality of what you're up against. Always pressing, always trying to get that little extra, always, 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 never satisfied. So let's assume Moez Kassam backed him up for 10,000. I don't think it would be an unlimited guarantee. But he did the second 10,000 shares on his own. Well, he was set to make, he thought, $3,000 for doing nothing. All he had to do was ride it out Other people would be selling. Once it broke a buck, the selling would come in, and that stock, he would make three. He might, if he's lucky on that 10,000 shares, he might make $5,000. Close it out, boom. He could type on Twitter, had some fun with retail today. But what happened? What happened? Finger started getting some legs. It didn't break a buck. What if it did? Not for long. And it climbed to 2. It just is, I saw the charts. And then it really ran to 309. So that guy who was trying to make $3,000 for free on his own 10,000 shares, he's short, I don't know what to call it. Let's say he's short 20 grand. He's in the whole 20 grand, and the guy has no money on that 10,000. And Moez Kassam is down, let's call it 20 as well, the part that he backed through this guy. So the guy's down with his brilliance. He's down 40 grand for just day trading. Let's assume Moez backed him up for 10 of it. He said you got to make sure you get out before that. So let's say he's now down 30,000. This is not a deep-pocketed guy. You could see those day trading shares get bought in tomorrow morning or Tuesday. And he's just one guy. There's a bunch of them that do this. Anson Funds is the big whale or the big shark. And these guys are the little fish that swim alongside. So when they eat a baby seal, all the blood and the guts and the ears and the tail and the toes float out. The other fish can eat that. That's all they are. They're just scavengers. So finger can squeeze. That's what you're trying to catch. It's what we tried to catch in G-Bucks. It's what we tried to catch in CRTDs. You've been through it enough. You can think it through yourself. I don't think Wall Street is set up to bail out the scavengers, unless they made the deal pre-trade. But I don't think they're going to bail out those guys. On the other hand, what is the volume of the shares that they have? I don't know. But it sets off a chain reaction. This guy that I just described, maybe he has to buy in 10,000 shares tomorrow. The stock goes to 5. Well, some other guy in Boca Raton wakes up, scratches his balls, calls in, and while he's calling in, he's looking at his computer, and finger motion is doubled overnight. He says to his assistant, "Go ahead and sell some." And then he sells, gets in it, but then let's say the stock's then 9. All of a sudden, he's got to buy in. So there can be. That's what causes these rallies out of the blue. My opinion on what causes a squeeze in finger is after the earnings are announced, there could be information we know and understand about the value of the company. Right now, I think the stock is either overvalued or fairly valued. So I don't think Roth Capital is going to do a deal above this. But you might have investors that are willing to do it because Benjamin as things change, things change. If you had SAIC come in and guarantee the next 18 months of delivery, financing, and credit in return for 10% of the company, so they get to keep the contract and Finger gets to keep the contract, I think it could be a $15 stock overnight. Then the shorts, all those scavengers and the big shark short, they're all trouble. The toad short, they're all trouble. And the buy-in could happen. But you're waiting on something like you need, it's like opening a safe at a bank, stealing. You've got to tumble every single thing in place before it happens. And you want me to predict for you that that's going to happen in 2 weeks. I don't feel that way. Now, I do give Ham's instincts and understanding a lot of credit. There's a lot of information. It very well could happen tomorrow morning. And before I go to these answers, I want every one of you, if you're still listening, do not, if you've never traded in the pre-market or aftermarket before in your life, please do not buy shares tomorrow morning pre-market. You put at risk all your profits, and you may go to jail. I am not part of it. I strongly recommend against it. And if the authorities believe that you're part of collusion, you're in trouble. And I don't want any part of it myself. I would rather wait until after finger motion opens and maybe wait 45 minutes and then make my decision on what I'm going to do. It's just not worth it. What, are you going to buy 100 shares and put your whole 2,000 shares at risk, the profit? Don't do it. Don't do it. All right, I'm sorry that answer was so long. I go long-winded because I don't think people understand what's going on here. There are no real shares. Everything's electronic. There's just a block of stock at the DTCC that the stock loan desk is adjusting how the volume of the Xerox machine. That's all it is. I used all the stimulus the government gave. Oh, that's great, Aaron. That's great. That's great. There's John. He knows silver. He knows silver. He knows platinum. He knows palladium. He knows gold. And he knows copper. And he knows tritium. I don't know. Oh, God. The only reason I ask is because I sold my whole position for other investments that let me down. Just wondering when I should start to rebuild my position. I don't know what other investments you bought. I mean, I don't know how to talk about all this stuff. Only you can make that decision. I think Finger, I don't know. I guess I'm not clear enough. But in January, I think I was pretty clear. In February, I think I was pretty clear. In March, I think I was pretty clear. April, I said Finger could double or triple, and it looked good. It's done it. And I would be much more of the mind, particularly with calls, to book my profits. That's a nice trade. 2x, 3x, that's a nice trade. Could finger motion double from here? Yeah, but I think it's more likely the max from here is 75 cents. I think it's fairly priced. Short squeeze is a whole different game because short squeezes, the price move is just divorced from the fundamentals. And that could happen. Your question is, when should you rebuild your position? It's whenever you want to, but I don't know your other positions. I don't know your tolerance. I don't know how pissed off you are, what your risk tolerance is. I don't know if you're in Nixie, but I think from tomorrow to, I don't know what date to give. I'll just go to the third week of May. So I'll say from tomorrow through the 23rd of May, I think Nixie has a really good chance of surprising you. And it's not on the machine every day. There's not a lot of excitement. People aren't talking about it. People aren't saying they're doing this and that. So you feel, if you own it, you feel left out. But I think over the next 3 or 4 weeks, you have a chance to double, triple your money in Nixie and possibly a lot more. So I'd be focused on that. So with finger, if I had made I didn't have the money, and I hate saying woulda, coulda, shoulda, but I would be taking at least my original money off the table and just buying calls, cheap calls that I know probably going to expire worthless, but keep my hand in the game. That's the one thing I would have done. But with Nixie, I think they're the next one. That's the action. That's the action, I think, over the next 3 weeks. I think G-Bucks could be the action over the next 2 weeks. If it's not, I think you got to walk away from it. But at the same time, G-Bucks is very expensive on a market cap basis. G-Bucks is taking a long time to finish their contract. It could do it. G-Bucks could be the squeeze. But for me, because I have very limited funds, I mean, I'm talking small. I'm talking small. They could carpet my position from one end of the island to the other. Delaware could beat my position in a war. We're talking small. But I can't do both, so I'd rather do Nixie. If I'm lucky and Nixie works, well, then I can start thinking about buying finger, G-Bucks, whatever. But I've already told you, Benjamin. Already told you. Nobody wants to hear it. They won't hear it now. To me, there's only 2 things to buy. One is Railtown, RLAIF, 30 cents. Your risk is it goes to 25 cents. Once they finalize everything they've already announced, when, I don't know when. It's been 12 weeks. Does that mean it's going to be another 12 weeks? I don't know. I'm leaning towards 12. Even the laziest bureaucrat can get something done by 12 weeks, but I don't know. But once it's finished, I'm not going to go through the whole story, but the combination of pent-up demand from buyers who cannot buy while it's in a quiet period, and from the ability to discuss the real value of the shares, my estimate is you'll make 10x on your money. I think it'll go to 350. I'd rather be in that. Nobody's talking about it. The other one's silver. Pay $40 next by October, it's $120. Volatile, yes. Pulls back in a crash. I don't think it comes back to where it is now. And then for the next 5 years, it goes to 500, goes to 1,000 an ounce. So I want to take profits I make, and even if I can only buy 50 ounces, I'll buy 50 ounces. I used to own, I think, 50,000, no, that's not right, 5,000, 6,000 ounces. I had something like that. 5,000 ounces, I think, 5,500. I don't have it anymore. I'd like to get back there. I don't think I have enough time. I wanted to build it up with these trades, just didn't work out. But I think you should be looking, not trying to chase the next short squeeze. I don't think Railtown's a short squeeze, by the way. It might have it in there. Nixie, I think Nixie is, I think what I'm looking for Nixie could be best described as a short squeeze. But I think your risks in Nixie is, I don't see any risk on the downside in Nixie. 10 cents, 20 cents, 30 cents. I think the risk in Nixie is it disappoints and it doesn't go very high, or it goes high. But for me, I want to keep a tight control on my, it is a small position, but I'm going to, and it's in my IRA, so I don't have to pay taxes. But I will try to take Nixie if something good happens and Railtown's still down. I'll try to move to Railtown. And if Railtown moves, I will listen to the story, but it's very likely that I'll take that and put it into PSLV or mining shares, but probably PSLV. By the way, on PSLV, there is one risk that Egon von Greiritz pointed out, and I've been thinking about it. I think he's right. Eric Sprott keeps all the silver at the Royal Canadian Mint, which is owned by the government of Canada. Not all of it, but he keeps a lot of it there. Do you trust the government of Canada? I don't know. But anyway, I still like it. I don't think we're at the point where they're going to confiscate anything. But I think you have to be Jack be nimble, Jack be quick, and start thinking in terms of reasonably taking profits. Look, I'll stop talking about you. If I had sold GTII at 8 or at 7 or at 6, if I had sold Finger at 9 or at 8 or 7 or 6, if I had sold CRTD at $1.50 and put it somewhere stable, maybe traded some of these others, it's a different story. We got to start doing that. Now, let me tell you how I probably am going to rebuild my finger motion position if I have enough money. Right now, I don't have enough money. I've got to do a lot of this quick trade. You know, I don't know if I'm going to be able to accomplish it. But if I can get my IRA up to, you know, a big enough size, what I would do to rebuild my finger position, and my strategy will mean I miss out on a squeeze, by the way. I think I'll sell puts. So in other words, I don't have this right now, but if I had 60 grand in cash, and I'm nowhere near that, I am nowhere near that. But if somehow I could trade here, there, and get there, I would sell puts, maybe sell the $2 puts for 30,000 shares. And then probably the stock doesn't go down, I collect that premium. If it does go down, I buy the stock under $2. That's what I would do. That's how I would rebuild finger motion. And the thing is, you have to study your own human nature. My nature, I'll just talk about me. I get all excited when everybody's excited. We're like wildebeests or zebras or zebras. We're like elephants. We're like cattle. We're like lemmings. That's what we are. When everyone's excited, we're excited. In investing, the best time to build your position is when no one else is excited. And that's what pisses me off about silver. We had the longest time to build our position. And now it's everybody's in it. Everybody's excited. But we still have time. I'm going to go down this as quickly as I can. I guess I missed some. We are squeezing this month. Get ready. I've been learning a lot of options. I like about 5 at different prices. It's crazy to see the calls are worth double. Sell them. It's going to be hard to sell them tomorrow. It's going to be hard to sell them. Unless the stock is up. And it could be. And Ham, I'm telling you, Ham could be right about what's happening. And I see that in the price action too. But I'm trying to be very, I don't know, maybe it's the difference of owning it and not owning it, because I don't own it right now. I don't own it right now. Stop playing this like a casino, act like an investor, be conservative. Well, I actually think that's what I'm trying. I didn't say it that way, of course, but I actually think that's what I'm trying to get across. We all have that urge. We all came here. I did, thinking I could turn a bit of money into $1 million. And for a while, it looked like it was going to happen. And now I look back and I say, what the hell was I thinking? My brother tells me about a movie, a New York guy. I forget the movie, but he tells me about it. The guy, I don't know, he's got family. He's trying to build an empire. He's trying to impress his wife, you know, typical guy. And it all goes bust. And at the end of the movie, he says, what was I thinking? I was rich already. That's how I look back and I go, God. Not just from this trading, other things. And I know, so there's an urge. I don't agree with the advice that you should diversify if you're trying to make a big wad of money. I think you got to pick one thing, know it cold, buy it while no one's looking, and then when it runs, if you get really lucky, it explodes. But looking back over the last 3, 4, 5 years, as a friend of mine from New York says, he says, we had our chances to sell on every single one. So finger motion, I'm telling you, 3x, that's a hell of a move. It's a hell of a thing. Killing a man. You take away everything. Yeah, let's talk about MMTLP, Balmaki. Where do you want me to start? From the very beginning, from Torchlight? Or should we go through the merger with MMAT or the fraudulent creation of MMTLP as a trading vehicle? Do you want to go through the threats and the fight? Do you want to go through all that? I own MMTLP. I never think about it. Ever think about it. Unless I'm on a call with the hardworking people, like 100% junk savvy, busy brands, then I'm engaged. But when I'm on these calls, what's the point? Let me ask you something, Bamaki. How is your position in MMTLP going to change tomorrow morning, this week, this month? What's going to happen? Do you have a buy decision to make? Do you have a sell decision to make? It's a waste of time. If you want to go through the legal details, and I've warned everybody, once a stock goes legal, it's totally different than the securities. It's the financial side of the market. Tune in to Not Legal Advice. He and his associate, one of the JRs, they do a thorough analysis. Buenas tardes. People now, they think 10% is a crash. We have gotten addicted. We have gotten addicted to everything always going up. Dr. Van Nostrand. Martin is a very bright guy, and I would think he learned a serious lesson. Yes, yes. I agree with that, although the system is set up so the money raises are detrimental, unfortunately. But I think I agree with you. I think he's going to husband it. But the last raise in December, I think, was detrimental. But I also think it was a good raise. You're going to say you're talking out of both sides of your mouth. I guess I am. I think Lynn Partners could have done a better job. But I also think that Martin, by deciding to take that financing, saved the company. So I think, and set the company up for really good growth. So I guess both things can be true. It's a battle out there, you know. Like that haircut. Yeah, I don't. I hate looking at it. Hey, PS71. I like that summary. I'm going quickly because I only have 10 minutes. My broker turned on my stock lending. Yeah, I really, that's the dilemma I can't figure out. They are breaking the law, securities law. At the same time, they have created a fractional reserve banking system. And they've been doing it for years. A security system, fractional reserve security system. Who's gonna enforce the rules? UK military personnel leaving their droves. They're saying they are not being used as political pawns. They signed up for king and country. We can't even protect our own borders. Wow. Wow. Yeah, the UK. I hope we don't go to war. Will they short attack? Yeah, they do it every morning. They do it every morning. They always do it on Mondays. And I think they will try it tomorrow. Nixie or Rail, if I could choose only one. You're going to hate this answer, but I would take the risk of buying. Well, if Nixie, I mean, Nixie could always go up on any morning. If Nixie, for some reason, is way up tomorrow, I don't think it will be, but if it were to be, so let me just say, assuming they stay at the same price they closed, I think I'd buy Nixie. And I think I would try to sell Nixie by the end of this week. I think it's pushing it to try to sell it next week, but I might, depending on what's happening, wait until next week to sell Nixie. But here's my gamble by doing that. I think Railtown could be any day. But I think, here's my feeling about Railtown. I think Railtown is complicated just by all the news they put out. So I think you'll have a little bit of, tiny bit of notice on Rail, but you might not be able to buy Rail at 30 cents. You might have to pay 40 or 50 cents, but I still think it will be worth buying. So anyway, I would buy Nixie to gamble that I could double or triple my money over the next, let's say, 10 days. And I'd be alert to at least taking some of that money, maybe this week, maybe the beginning of next week, and getting its ass over into Rail. That's how I would do it. I have 3,500 finger to buy tomorrow. Don't know to wait or rush in to buy. Only you can make that decision. You could buy. If you're dying to have it, you could buy. 1,000 at the opening, 500 at 10:30, 1,000 at noon, and 1,000 at 2 o'clock, something like that, averaging it over the day, or pick a price. I don't know what's going to happen tomorrow. If it runs up, I tend to think it'll pull back and you can buy it. But if I were picking a price, maybe the close for, I might put in a GTC to buy the stock at 250 or 2.25. It may never go up, but if you're hell bent on buying only finger, take advantage. If Roth Capital does a financing, take advantage of it. If for some reason people are disappointed or Moez Kassam sells it off, take advantage of it. Have an order out there under the market, buy shares on it while it spikes down, and then it can run up. I'd love to convince you guys to sell calls against part of your position, but that meets with such blowback. I mean, last week, when I told you, I think it was Wednesday, you could sell the $4 May calls for 20 or 25 cents. Imagine selling the $4 at 25 cents last week. They're going to expire in 2 weeks. I don't know, 25 cents on 5,000 shares is $1,000 net, 1,250. You do that every month or every other month, it starts to add up. I know you are. I know. I'm learning how to. I'm not a teacher, and you know, thanks for putting up with me. Yeah, thanks for being an asshole. What the F are you talking about? Nobody wants to see. What do you? I don't know. That's not a real question. What are we doing with Finger? I've just spent a lot of time talking about it. For me, I don't have enough money to buy Finger, so for the next 2 weeks I'm focused on Nixie. But I've explained some things you can do with Finger. What would be a good selling point for Finger? It's an impossible question. I don't know your goals. I don't know your emotions. I don't know what you're trying to achieve. But if I owned Finger and it went to 350 tomorrow or this week, I'd think seriously of selling calls against it, make calls against it, or selling the stock. And this is just a judgment call. I'm going against everything everybody's telling me. What I hear from him, I'm going against everything. But I believe 60 to 75%, and more maybe, I think Roth Capital is going to do a deal at 250, 2.25, 275. I don't know the exact amount. But I don't think they're going to do a deal at 350. I think it's going to be a discount. So that's what I would do. But that's a short-term answer. That's a 2-week answer. 2 weeks. Anyone buying call options tomorrow? Shills are posting Williams phone saying he's downplaying Finger. Whatever. You know, that to me is a sign they're in trouble. So I'm smaller. All right, I got to go in 1 minute. Let me just, you know, if they want to post pictures of me, that's fine. I have one word for them. N-O. You'll need to learn to say one word. N-O. Ramen soup is a jerk. I use a broker. I'm just got to skip. Farron says Roth Capital is doing an offering. He says 250 share. My guess it's under $1. I didn't, you know what? I don't know that they're, oh God, I can't fight it. I can't fight it. I can't fight it. Can't fight it. Can't fight it. Good, Michael Lonsky. Well, so the more they do this, the more I have to tell you that what makes a squeeze isn't analysis. Squeezes are not analysis. Squeezes are the shorts are trapped. And then the price divorces itself from the value of the stock. And all you need is some big buyers. All you need is a buy-in. All you need is Fidelity in trouble. And that can happen tomorrow. And the reason Tony douchebag and ramming up his butthole soups, the only reason they're doing this is because they're being paid. They're being paid. But whatever. If you Ham is not feeling well. Ham is not feeling well. I do not own Finger. I do not own Finger right now. I've owned a lot of it. I've lost money in it. I've made money and then lost money. It's just, I don't know. Why does that matter, Augustin? Augustin, I do not own Finger. I'm good. Or yeah, I think that's the way to do it. No, you can ask. You can ask what you can. I'm not mad at you, Benjamin. Look, part of it is trying to. A lot of my frustration is this should be disclosed to everybody, and it should be regulated, and it frustrates me. But when I'm answering your question, I'm trying to answer all the questions I've heard too. I don't mind your question. I think it was a good question. You can ask again. I think it's, you know, what am I going to do here without answering questions? Of course, I know I'm a jerk and I get worked up and I go on and on and on and I don't make any sense, but I am trying to get better. If you were to pick a day for reoccurring buys since, oh, that's interesting. That's interesting. That's interesting. Tuesday. I think when you're buying airline tickets, Tuesdays are a good day to buy, or Saturdays. But I'd say Tuesday. Why? Because if there's built up demand over the weekend, Monday could be up. And once that dissipates, probably Tuesday is soft. A lot of economic data comes out sometimes on Wednesdays, even Thursday. I don't know. I'd pick Tuesday maybe. I don't think it matters. Ham might be on his flight. That's true. Nixie ran pre-market. I know, to 12. Exactly. It dropped. It didn't drop like a rock. That's not correct. Well, I don't know what you mean by like a rock. It ran to 12 and it opened at 8. I think it ran to 10 even when it opened, but I think it was 8. And then it kept dropping from there. You're right about that. And that's a risk I've tried to point out. That's why when there's a lot of volume in Nixie, I think that's whatever the market gives you. I think that's when I'll probably sell. The day it does 50 million or 70 million or 40 million in volume. Thank you, Donna. I don't know what to say to Ramadan in soups, and I don't know what to say to Tony the douchebag, Denaro, and all those guys. But if they are bashing, maybe there's fire. You know, where there's smoke, there's fire. I believe if you're closely following the stock, you should be involved in it. If I owned it, you'd be saying that I'm pitching it, I'm pump and dumping. If I were short it, you'd be saying there's no way to win. No way to win. No way to win. No way to win. I'm not going to go back over my trading history in finger motion. I'm not going to tell you how I got, because you don't care. And it doesn't matter. I got blown out of my position because I went for that effing movie. I put what I thought was the community. I should have just said, no, I'm going to sit at my desk. But hey, you should own some. Do you know when I was on Wall Street, we weren't allowed to talk about shares we owned. You couldn't own them. So I think your point of view is back-assward. I think it's in your best interest that I don't own anything. So what I say is not colored by my own sense of financial position. But luckily for you, I can divorce those things. I can divorce those things. So if you think what I'm saying about Finger is somehow less true because I don't effing own the stock, and if you think I would know more about Finger if I owned the stock, I'll leave you to your illusions. Yeah, he had antibiotics, but he may be going to Singapore today because the antibiotics might have worked. All right, I'm going to sign off. I've got to go to Mass and I'm late, and I appreciate everybody signing in. Please, just the final thing, whether I own the stock or not, I do know one thing. You and I are not allowed to collude to manipulate a price of a stock in the market. So please do not buy shares prior to the opening of the stock. After that, I don't think you can, anything you do is not going to matter one way or the other. But if you get in there pre-market to buy shares, you're violating the law, I think, or it can look that way. If you've never traded pre-market before and you do it tomorrow morning, I think you have a target on your back, and I'm against it. Just want to be clear. All right, I gotta run. Peace. Remember to say a prayer tonight for Robert Weiss. Pray for the soul of Robert Weiss, and pray for his family. And while you're at it, say a prayer for Jenny L. Peace.